Good morning, traders. It's the 21st of February, Pancake Day, Steve.
Yeah, I know. I noticed that. Yeah.
Hope everybody's
Can't
doing
wait.
well. Yeah, indeed. Thank you very much for tuning in, guys. Hope everybody's doing great. I'm Joe, obviously joined by Steve. We're Signal Centre, and we're going to run through the latest headlines that are impacting markets at the moment, and also go through the latest charts to see how markets are shaping up for the day ahead. And it's quite an important day. Number of data points out later on, so we need to be aware of those and also the impact they're likely to have. So let's get stuck in, shall we? As always, anybody watching, if you've got any market requests, if there's anything you're looking at the moment and would like an alternative opinion on, please feel free to post up or any market that you're looking at, and we'll do our best to cover as many as we possibly can. Okay, latest headlines. Let's get to that, shall we? And the SNB, the Swiss National Bank, still on intervention alerts. There's been a few rumours swirling around here. The National Bank Vice Chair stated that the bank was still willing to intervene in currency markets if necessary. He reiterated that there could be action to buy or sell the Swiss currency as required, and also reiterated the need to bring inflation back to the range of 0 to 2% target. The Swiss National Bank are not afraid when it comes to intervention, and there's been some horror stories in the past that have wiped out many a trader. So do be on alert for that if you're trading any Swiss Swiss franc currencies at the moment. There were some narrow ranges yesterday, and the dollar has edged a little bit stronger today. That was because we had a US holiday yesterday. The markets were closed in the US for the President's Day holiday. Risk conditions were slightly less confident in Asia on Tuesday, with equities posting slight losses, which helped underpin the dollar. The UK government borrowing remains high. The latest borrowing data recorded a surplus of 5.4 billion for January, after a substantial deficit for December, but the surplus last year was 12.5 billion. January is always a strong month due to tax receipts, and there was a huge spending on energy support measures, with interest payments also continuing to increase. So focusing on today, we've got a number of PMI data releases. The latest PMI business confidence data will be released today, with data from the Eurozone, the UK and the US. The consensus forecasts are that only the Eurozone services sector will be in expansion territory for the month. That's a number above 50. And the relative outlook between the Euro and the US will be important for underlying market sentiment. We've also got some inflation data due out today from Canada. The latest consumer prices will be released today. The consensus forecasts are for headline inflation rates to decline to 6.1% from 6.3%, with the core rate edging higher to 5.5% from 5.4%. So that's it for the latest headlines. Fairly short and sweet today. Good morning to our viewers who are posting up already. We'll get to sterling yen at some point. And good morning to you, Mark, over on TradingView. Okay, let's get stuck in. Steve, want to kick us off with a look at cryptos?
Yeah, I will do. I just wanted to sort of like go over that Euro Swiss that you were talking about. But when the Swiss pegged itself to the euro at 120, and this was something that the Swiss National Bank did back the week of August 11, 8th of August 2011, and you can see the market had broken down to parity level. So obviously Swiss Bank didn't like that, and they basically a few weeks later brought in a peg of 120. So you can see we had some volatility before they actually took that action, and that peg of 120 lasted for a good 4 years before they, on the Tuesday, I think they said we're going to keep the peg in there, that's not going to change, keep it going strong, and then they pulled it the next day. So that was a horror show. But anyway,
And that wiped out traders, brokers,
yeah,
financial institutions, the lot.
yeah. Yeah, so I mean, we're around about the same levels that we sort of like, that sort of like debacle started. We've been down obviously to 94. So yeah, maybe they're going to have another go at it. I mean, I don't think the Swiss National Bank did itself any favors or did very well out of that anyway. So I'm sure they painted a different picture.
Yeah,
Let's take a look at cryptos. Yeah.
Yep.
Weekly chart is looking positive after last week's positive move as well. We're around this really key resistance of 25,400. daily chart, let's drill down a bit closer to that, and we can see it a bit. We had a spike higher to the 15th of August high. That stalled in front of the 25,400. We've got a bit closer this time, and we're looking pretty positive. So it does feel like it's going to get taken out. We've got a golden cross on the moving averages. Everything looking quite positive for cryptocurrency. Next level, really, after that 25,400 for me is the 29,000 level. 28,800 to be exact, but around about this area here, let's still draw a little bit of a resistance band where I think we could head towards next. So really around about here. Ooh, that's where we're going to next if we manage to break this resistance. Obviously, you can be a contrarian trader, the trend higher, fade the in front of resistance, but I think there's still a little bit of a momentum in there in the cryptocurrency world that you have to be aware of. So going with the flow, Ripple XRP really desperately trying to break above this downward trending resistance. We had a spike above it yesterday, and it closed back down below it, but resistance just above at 41 cents. Also looking like we're going to get that golden cross in there as well. So it looks pretty optimistic really on the cryptocurrency front. Had a golden cross on Ethereum on the 13th of Feb, and we've been upwards since then, and looking to take out now resistance at 1730. 1730 was a key level. You can go all the way back to May 22 that we saw this like double bottom potential here, and then when we broke through, it really sort of did accelerate through and then came up and formed resistance again. So you can see it's quite a pivotal level, that 1730 level in Ethereum. Taking a look now at gold. On the daily chart, gold had a little bit of a move higher yesterday, formed a doji candle, but this morning or overnight we've reversed lower. We got up to 1847.5 yesterday, and we can see that we haven't managed to sustain that upward momentum and have reversed sharply. 4-hour chart is still below the cloud, we can see up here, and the 1-hour chart is looking like it's about to retest that cloud completely. If we do, and it feels like we have sort of like broken support at 1837 on the hourly chart, and opening up on the downside. So maybe a potential gun to head trade idea there. Silver, similar sort of price action in silver. Support was at 2170. We're just trading around there now, actually, broken below it, trading around there, still above the cloud on the hourly chart. So looking not so bad. Copper has rallied over the last few days from 415 and has formed, well, currently forming a bullish engulfing after yesterday's pullback, and looking to push higher. 420 is the resistance level, and if we look at maybe look at the daily chart, that'll give us an idea where we are in the larger picture. And we can see the spike up to 435, the sell-off down to 397, 396 was support, and the pulling back now approaching the 61.8% fib at 420. On the crude oil, yesterday was a positive day. However, we haven't really been able to march on from there. The 55-day moving average managed to cap gains eventually, and we are trading in a bit of a channel really. Resistance on the WTI at 82.60, support at 72.58 and 70.21. We do have the short-term price charts are battling with the cloud, so really sort of like trying to re-establish this downward trend which we've seen, and it's been in place for quite a while. The highs we saw was the week of the 7th of March. We spiked higher again the week of 7th of June. Since then, it's been one-way traffic down. We managed to sort of like have stabilized just above the $70 mark. But yeah, two-way price action backwards and forwards, trading in a range. Brent crude oil also trading in the same sort of tact as the WTI crude oil, but trading at a premium of $6.30. Again, positive day yesterday, just above the 55-day moving average, but we haven't managed to kick on too far today. Opened up higher, pulled back lower. Natural gas, obviously the one we keep talking about, continues to move lower. Yesterday was a bit of an indecision on we're looking at this flag potentially as a breaking down of the sideways price action, but broke down and stalled really on the downside yesterday, and slightly on the front foot this morning. So even on the overall on the shorter term charts, we're still in a minor downtrend. See the hourly chart here. Our attempt to buy it failed miserably. You can see maybe the sort of, again, you can see an inverse head and shoulders type formation forming here, but very difficult to go with this. It still feels like you have to sell rallies. That again, another sort of opportunity for a gun to head maybe. Yeah, so over to the FX, Joe. Not really a lot to talk about in terms of the commodities or any real trend in there.
Yeah, it's been pretty much the same in FX, to be honest. A lot of range-bound, sideways moving markets, which for me has been quite difficult to sort of find opportunities. So anyway, let's look at US dollar. So we saw that they had a couple of days of weakness following the break of this short-term downtrend. So it looks as though we were in corrective mode. We've got 38.2% fib level up here at 106.15. So that's kind of the short to medium-term target that I'm expecting. We've actually seen a pretty healthy gap to the upside today. So this is where prices closed. Bear in mind, it was a holiday yesterday in the US, so muted price action, bit sort of pent up demand building. So we closed around 103.77 and we opened around 103.93. So a fairly decent gap there created on the daily chart. Let's just take a quick look at the intradays just to see if we can highlight that in a bit more detail. Let's get these drawings removed. So we can see here there was a gap to the upside, although it looks like that gap has been filled on an intraday basis. So that's all pretty good from a technical perspective. So yeah, while above this newly formed support at 103.62, we can see there's a few sort of spikes in there that appear to have done a job previously as resistance and now as support, expecting that level to hold and for higher prices to be seen. So this would suggest that the overall conditions in the economy are there's still a lot of uncertainty, bit of concern, and therefore if the dollar starts to rally, it would suggest that things like the equity markets are going to drop and maybe have a bit of a pullback. But all in all, the trend does remain a little bit on the bearish side, but I don't think a correction to the upside can be ruled out. So do keep that in mind. Let's take a look at how that's impacted euro US dollar. We can see here that prices are finding support at around 106.48. If we look at price action on Friday, we can see we had a little bit of a nose below that level, but then closed above it. Yesterday, totally undecided, posting a very small doji candle, as we can see just there. So highlighting further indecision above support, which is encouraging. And if we do see a move to the upside, that would suggest we're going to see dollar weakness. But as we just saw from that dollar chart, there's potential for dollar strength there. So this level now looks pretty critical, 106.48. If that breaks down, it would indicate that we're going to see maybe a higher move in the dollar index. But again, very undecided and contributing to these kind of narrow and choppy ranges that we're getting in various FX markets at the moment. Let's take a look at sterling versus the US dollar. Again, more range-bound price action. Another doji posted yesterday and shaping up to post another doji today. Potential for a double top to form here, as highlighted by these red arrows. A break below 118.42 would be required in order to complete that pattern. So for now, it's only a potential setup and still got plenty of work to do. So since the break of this trend, price has just been pretty choppy and sideways all in all. Let's take a look at Aussie US dollar. That's slightly lower today after a pretty good day yesterday, following on from the bullish hammer candle that was posted on Friday. Today, we're trading within the body of yesterday's candle. For me, it still looks like lower prices should be seen here, and that would suggest dollar strength. We can see here there was a break of trend, and we can also make out a little bit of a consolidation slash continuation pattern here that's formed by these yellow bands, potentially a bearish flag, indicating that lower prices will be seen. And the first target on the downside is that 38.2% fib level at 67.80. Been a request to take a look at New Zealand dollar, US dollar today. Let's take a look at that as well. So this is the daily chart. Major level of resistance or band of resistance here between 64.68 to 65.30. Lompra suggesting that there could be an inverse head and shoulders here on New Zealand dollar versus US dollar. And yes, I can see that, and I can certainly get on board with it. This, I guess, being the left shoulder down to here, this being therefore the neckline at around 60. Well, Lompra is saying at 65.26. Let's just have a look. So that would be, yeah, around 65.30 I've got here, which is the high that was posted on the 2nd of February. So we need to get above that. And potentially we are in the process of forming a right shoulder. It is only potential. So if you are going to speculate on this, maybe this support level here at 61.91 could be a bit of a platform for a right shoulder to form. It's highly speculative. Often you can see these right shoulders actually come quite a bit lower. I mean, alternatively, you could go that being the neckline and that actually being the right shoulder. But again, further confirmation required. We can see there it didn't quite work out on that occasion, didn't break through the neckline and actually broke through a short-term uptrend level before correcting lower. So a couple of ways of maybe looking at that, but either way that you do decide to look at it, further confirmation is required. I am keeping an eye on this support level at 61.91 for the time being. Okay, I also had a request to look at sterling yen, so I'll do that. And again, another example of a range-bound market. So we've got resistance here in black at 62.33. Above that, we've got the neckline of this kind of top pattern that completed back in December. That's at 63.06. So I've got this band here drawn on the chart, which I expect to act as resistance. And we've also got a downtrend line here as well. On the downside of this range, we've got a couple of support levels to consider. There are some higher lows in here, but the main one for me is that 155.35 level. So what do we do here? I mean, it's coming into a major resistance level. So I think my preference from a value perspective would maybe to be shorting this into this kind of region, but I'd like to see a bit more confirmation that this level is actually going to prevent prices from moving higher. So a bit mixed on that one for the time being. Let's just take a look and see if there's anything on the intradays that can provide any excitement. So we are approaching this previous swing high that we posted on the 14th of February. I'd maybe be watching this for some clues about where we head next. If we hit this level, maybe have a little bit of a move above it, but then close below it, then we would potentially have a swing failure pattern, and that could be a trigger for some short-term short positions. Of course, if you wanted to look at this from an intraday basis and try and buy that breakout, then you could, but I would revert back to that daily chart just to show that there are some pretty significant resistance levels above between 162.33 to 163.02. Okay, I think I'll leave it there on the currencies unless there's any other requests. Please feel free to send them in and I'll come back to them if necessary. But in the meantime, Steve, you can take a look at some indices for us.
Yeah, I'm going to take a look at indices now. We're still in an uptrend, short-term uptrend. FTSE at its all-time high, so it's just reversed from here. 80, you can see the 80 46.5 level that we hit last Thursday, or Thursday the 16th. So that is, yeah, that is last Thursday. We've reversed from there. Support coming in now around about the 79.72.5 level. That's the upward trending support line, and we've got the cloud below that. So still short term looks pretty positive. On the daily chart, we can see that these candles that are posted over the last few days look a little bit toppy. Look at potential for a reversal. You've got doji candles mixed with hanging man candles. So yeah, potential for a pullback, which wouldn't be unusual because we've had quite an exponential rally. A nice, really nice impulsive move higher in Elliott wave, like 5 waves, maybe looking for that correction now. On the DAX, again, similar sort of price action. We've got support coming in at 15,241. That would be the level to watch really on the downside. A break of there could open up a little bit of a flush out. 14,650, that's where the next support level will be. Above, really looking, we're trading around the 78.6% fib retracement, so we've broken above there, looking really at the all-time highs aren't far away. 16,300. So yeah, pretty positive on the DAX, but a small pullback wouldn't be unusual, wouldn't be a surprise. So be aware of that. The US indices look very similar in terms of topping out on a short-term basis, and we're obviously a long way away from the all-time highs, around 37,000 for the Dow. We're down at 33,660. We can see the short-term support coming in at 33,425. We've got the golden cross, obviously, that was posted back in December. We've got the 100-day moving average moving above the 200-day moving average, which is also very positive indeed. We are trading around the 55-day moving average, so be aware of that. Broken down through it a few times, but haven't managed to close below it. So that would be an indication maybe of a short-term stall. It does feel a little bit tired at these levels. Similar to the Nasdaq, really. Potential for a double top formation. The high from the 2nd of Feb and the 16th of Feb, and the low from the 10th of Feb is the neckline. That's 12,200. We're only 60 points above that at the moment. That's not a lot in terms of the Dow's ranges that it can pull out. So, and the S&P is right on the neckline. Double top formation potential here. So, yeah, a case of potential buy the dip, but very tight stop and go with the flow if it does break below. That's how it feels on the S&P. Yeah, and I want to get one of these on very quickly, Joe. So let's dive into the gun to head.
Right, before we do that, there is a request to look at Aussie yen, so I'll do that. Maybe it's just a stalling tactic from
Yeah.
myself to slow you down. But right, just quickly on this. So Aussie yen, I've been speaking about this for a while. I think there's a head and shoulders top pattern that's formed here, but I am getting squeezed on this corrective move to the upside. I haven't got any position open just for um, confirmation of that, but it is something that I've been trying to get trades on along the way. So for me, it appears as though we completed this pattern. We then saw a big break to the downside back here, but the squeeze to the upside is pretty annoying. We can see here there's some pretty large ranges, pretty choppy, but we are into a 50% fib level of this entire move. So from the head down to the lows that we made in December, and prices potentially are stalling around here at 93.03 to 92.88. So I think that at some point this is going to roll over to the downside, but of course you've got so much going on with regards to the yen at the moment, with the changes in the financial ministers, etc. Other speculation going on there, which is causing some pretty wild moves in yen currencies. So do be careful of that. I still think my bias is for lower prices, but I need to see some firmer clues on the price action charts before I start recommitting to that. So I do think upside is limited here in Aussie yen. But if we get a breakthrough at 93.03 level, then it's really going to test my resolve on that, and I might have to give up on it. But for now, I think the value is on the downside. Hopefully that was helpful. Steve, let's move on to the gun to the head because you're itching to get something on. And we're all itching to find out what it is. So let's move on. So gun to the head trade. This is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, what would we trade right now? Each of the ideas we come up with must have stops and targets and risk reward ratios that are in excess of 2 to 1. The trade ideas will expire at 9 p.m. UK time or when the stops or the targets are hit. We're trading this with live money. We put £2,000 into a trading account at the start of 2023. And it hasn't been an amazing start for us. It's been pretty choppy. We're down around about £129 at the moment. So around about 6% that would be at the minute, Steve. So, you know, by the way, we do look for decent targets on these trade ideas. So it will only take a couple of wins to get us back on board and looking in good shape. And we've seen previously from doing this for a long time on a hypothetical basis that we can go on crazy runs where we can put on 20R in the space of just a few days. So let's hope for the start of that today with Steve's trade ideas. So do you want to talk us through what you're looking at today?
Yeah, really looking at the DAX. We've just broken through the 4-hour cloud to the downside and the hourly cloud to the downside, and these topping candles on the daily charts. I'm sort of like looking for a breakdown. It's running away from me. Or it was running away from me as we speak. So let's hope it just pulls back now when I'm explaining this trade idea. Really want to get the stop above the cloud, maybe above this swing high from this morning. And yeah, please pull back a little bit so we can get some decent risk reward on. So yeah, looking at current levels around about here. The stop, yeah, I'll put it exactly where it is, and something like that, a nice 3-to-1 risk reward on the stop. So let's try and get it on as a trade. You know what it, oh, I've got to do it on the O&D chart. I was all prepped there, ready for it to go, and it's just blown me out of order. So let's do that again. Stop was at 15,513, wasn't it? 515. Let's put it at 15,515. Targeting. This isn't good, Joe, is it?
It's giving me plenty of time to try and find something, so I'm happy.
Yeah, something that this is what I was looking at. But obviously it's running away. We want to sell it at market. We want to take profit, stop loss. We want 1% risk. Can we get the trade on though, Joe? Doesn't look like we can,
You got a
really, does
size
it?
issue, have you?
Yeah, I got a size issue on getting this
We
trade on. Yeah, I have to risk more than 1% really to get the trade on. It's not
is
ideal,
that
is it?
allowed?
No, that's not allowed. So I've got to look for something else. Have you got anything?
Have I got anything? Really struggling, to be honest, at the moment on these trades and sort of trading my own book as well. I just can't really find any markets to trade, and obviously in those scenarios, it's easy just to get caught up and trade anything, which is obviously not the correct way to do things. So let's have a go. I'm having a wild stab at something, and it's Euro New Zealand dollar. So we've got all these PMIs out today. So this could be over with pretty quickly, but I'm hoping I can catch a bit of a move. So this is the hourly chart. On the daily, I've got to say it looks pretty constructive, to be honest. Already we've got a pretty big move to the upside following the break of this resistance at 70.39. But price is potentially stalling into these previous highs that we've posted over the last couple of days. If we take a look at the intraday charts, we can see here that there is some resistance building, and we've seen a couple of failures here. So we saw a move above that resistance at 9 o'clock yesterday morning. We've seen another look above that level today at 7 a.m. And potentially going to close below that. So it's pretty scary stuff. I'm going to actually bring up the ATR levels just to give me a bit of room on the stops. Let's bring that up quickly. ATR. Average true range, that'll bring up the panel below. So at the moment on the hourly, the average true range is for 26 ticks. So what I'm going to do is place a stop loss 26 ticks above the current level to give me a stop. Let's go at the high there, 26 pips goes there. So I'd like to sell Euro New Zealand dollar, please, at market. My stop loss is at 72.03.
Yeah.
And let me see if I can get the periodic volume up to see where the volume is controlling this at the moment. And we can see that volume point of control there on the 20-day period. So I'm going to go for a target down at 69.76.
So just under 4-to-1 risk reward, 3.9-to-1, was it?
I've got a bit higher, but whatever you got will be fine. Stop loss 72.03.
72.03 stop loss, 69.76 target.
Yeah.
Okay, mate. Yep, because it's a widespread in there, it's like giving you a crap fill. So, but that's the way it goes. You've got to just go with the flow here.
Yeah. All right, over to you, mate.
Okay, right. I'm going to try and go. Are we going to go for the natural gas turnaround now? Head and shoulders, inverse head and shoulders formation, or double bottom formation here. So I feel like a fool, but there's going to have a big old bounce back one day, Joe, and yeah, would love to be on it. That's about what we want to look for a break higher. So yeah, potential double bottom formation. Let's get the trade on, if we can get the trade on. Stop loss, take profit. Want to risk 1%. We can get a trade on to 24 price. Target in a move to 264. Gives us a 3-to-1 risk reward. Looks like it. Yep. I'll adjust them. 264.70. 264.
Oh shit,
And
Steve, what have you done to our account?
Oh, what's happened?
It said you was offside 400 quid. It looks like it's sorted itself out. I'm not sure what happened there.
Oh, really?
Yeah.
Then the margin dropped. You're
Right.
looking at the margin.
Yeah.
So putting the trade on, don't scare me like that.
It did. It showed up on the MT4 that I'm looking at offside by a significant amount.
Right.
Right. Let's
Okay.
quickly get rid of that.
Yeah. Yeah. So I mean, the margin. I suppose maybe it sort of like extracts the margin to do the calculation on the MT4. Don't know, and then places it back in, realizing it's just to sort of like check that the trade can be done.
Yeah. Okay.
It's a weird one.
Let's hope so.
Yeah. So let's see how we get on with that. Potential inverse head and shoulders formation, double bottom formation.
Okay, lovely. Good luck. Right, okay, so day ahead, and as mentioned, it's a pretty big one today. So we've got Eurozone PMI index, which is due out at 9 o'clock. Shortly off of the back of that, we've got the UK PMIs at 9:30. Got German ZEW at 10. We've got Canadian consumer prices at 1:30, so that's the latest read on inflation. Then we've got the US PMIs at 2:45 UK time, and then overnight we've got some central bank action from New Zealand with their rate decision. That's at 1 a.m. UK time, and then tomorrow into the Federal Reserve minute. So potential for a substantial amount of volatility here in the markets, which would be welcome for some, I imagine, who like to get involved with volatile price action. And we are stuck in a few ranges and choppiness at the moment with a number of markets. So this could shake them into life and create further opportunities in the days ahead. Okay, thank you everybody for watching today and for participating and posting in your comments. They are always appreciated. We hope everybody has a fantastic day, and we will see you tomorrow morning.
Cheers all.
Bye.